Welcome to our weekly Forex forecast, and this is for trading the week of May 18th to the 22nd, 2020. Just a quick disclaimer here before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money. As usual, we'll start off by taking a look at our calendar here. Before we dive into that, just in terms of the overarching stuff that's going on in the markets currently, so in terms of oil, we did see oil go up last week, and the reason for that was because of the oil cuts, production cuts that they have been talking about, and everybody seems to be supporting them. Saudi Arabia and other oil-producing countries are all in favor of production cuts, and the price war that Russia and Saudi Arabia had is not on anymore. So we are seeing the oil prices going up. As a result of that, Canadian dollar has done well as well. Other than that, we also started seeing more comments from President Trump in regards to China. So previously, we had seen that US and China were basically going back and forth in terms of exchanging comments and placing blame on each other. And then there was a call and markets like that, so because they were working together. So now we recently saw that President Trump was making comments again. He was tweeting about China, and then they stopped. So a couple of things happened. One, President Trump has asked a lot of funds to basically not invest in China, and then he has also made some comments in regards to not wanting to meet and talk about trade deal, renegotiating the trade deal, because things have changed since the trade deal was put into place. So there were comments like that. And then there was also Huawei, and they are not selling technology to them. That could end up being a bigger problem than this whole trade deal and everything else. So we'll see how that plays out. Keep an eye out on the news to see where that situation is, if the situation escalates. So we were there last time as well, and basically the two countries were able to work things out. But till they do that, it will be a risk-off environment for markets, which means the stock markets will drop, and then we are likely to see yen crosses and US dollar crosses drop. However, these sort of situations can change so quickly because it's just a matter of a tweet, right? So in that case, so if we hear any kind of comment or a tweet saying the two countries are going to talk this through, that will be very risk positive for the markets. That means we are back into risk on environment, and that means we're likely to see dollar crosses and yen crosses and Swiss franc crosses go back up. So this is a very dynamic situation. Unfortunately, there's no way of predicting where this will go. We just have to deal with it, and a lot of times we won't even know till the market moves. So basically, we just have to be careful. That's the bottom line there. In terms of the news here coming up, we do have GDP, preliminary GDP numbers out of Japan. And then another thing that we have seen out of Japan as well, you will notice that stock market has dropped, but yen crosses haven't dropped as much like they had before. And part of the reason there is because Bank of Japan has been coming out with a lot of negative forecasts in terms of the economy. They have been increasing the stimulus plan that they're putting into place. All of that is good for stock market, but it is actually not that great for the currency. And we may see Bank of England do that as well. We saw Reserve Bank of New Zealand is open to negative interest rates. So that's not great for New Zealand dollar. So anytime when the central banks do an expansionary monetary policy announcement, that is actually will prove to be negative for the currency. That's why Japanese yen, even though we have seen yen crosses drop, Japanese yen has not been as strong as you would expect it to be. So any sort of negative data out of Japan is likely to have a further impact on Japanese yen, and it will weaken it which means our yen crosses won't drop as much as the stock market may do so. So we'll have to keep that in mind. Other than that, we have monetary policy meeting minutes here for Australia. At this point, the important thing that we'll have to focus on in terms of the monetary policy from the central banks will be, one, are they interested in negative interest rates? If they are, that is negative for that currency. Fed came and said that they're not going to do negative interest rates at this point, even though President Trump was tweeting and asking Fed to do that. They basically came out and said they're not going to do it because it's not good for the currency and it's not good for bringing in investments into the country. So they have basically taken it off of the table right now, for now, but it could happen in the future. So if it does, then that would be, so again, I think I should maybe do a video on just that to explain why that is a problem. But that's basically what we're looking for at this point. Every central bank has done a lot of monetary policy stimulus into the economy, and if they do more, that will be negative for the currency. And if they talk about negative interest rates, whether they go into the negative interest rates or not, just the talking about it creates market expectation. So the currency will be impacted negatively by that. And then we have employment numbers here from UK. And at this point, we are seeing, or we are expecting a drop in average earnings here. And the drop is expected to be quite small, but I think we are likely to see, more. I think it's got to be a bigger drop than this one. I wouldn't expect the earnings to be going up when there are so many people that are unemployed. So I would expect a bigger number there. And if that happens, then that is likely to be negative for the pound. Also, claimant count. So this is the number of applications, unemployment applications that go in. I think that is likely to increase as well. Now, if the increase is reasonable, then we shouldn't see too big of negative impact. But if it's substantial, let's say it triples, then that is going to be, or more, then it will be negative for the British pound. Now, British pound has dropped quite a bit, so watch out for pullbacks in it. Just keep that in mind. And then we have the ZU economic sentiment here. It's expected to be better. And actually, it was surprisingly, the US dollar consumer sentiment numbers came in better than expected, which was interesting. So these numbers right now, it's just hard to predict where they will go. You would expect it to be lower, but if it's better, it will be good for the euro. So just we'll keep an eye on that. Building permits numbers here, they're expected to drop somewhat. I think they're likely to drop more. That's what I would expect, because although I don't think construction has stopped, but the people starting these projects would be expecting a drop in demand. And as a result of that, the number of applications for building permits should drop. Now, if this number is actually better than expected, expect a positive result in US dollar, and we could see US dollar go up. Fed Chair Powell here. Now, we have heard a fair bit from the Fed last week, but anytime we have Fed speaking, or central bank, any of the central banks making an announcement, or they are giving a speech, it can have an impact on the market. So right now they said no negative interest rates. They will keep on doing the quantitative easing. So we'll just have to kind of watch out and see if everything stays the same, then I wouldn't expect much of an impact. However, even a small comment can change things quite rapidly. And then we have another FOMC members. We have CPI numbers here. These are inflation numbers. Inflation basically measures how much the cost of goods is going up. And in this case, I would expect a drop here, because if people aren't, if they're not going to the shopping malls, they're really, they're not buying stuff. So when the demand drops, the cost of goods tends to drop as well. Although we are seeing for certain things like groceries and stuff like that, cost of goods is going up because people are consuming more, and the supply chains have been disrupted disrupted, which leads to an increase in price. So we'll see what happens here. If the inflation number drops more than this, that again is negative for the currency. So we'll keep an eye on that. And then we have final CPI numbers. So this is the same number here for the Eurozone. Now we'll see if there's an adjustment. Any downwards adjustments here will be negative. Anything that comes in better than expected will be positive. We saw the positive number for US. I believe so, if I can remember correctly, but any positive number will lead to a positive impact on the currency here. And of course, we have the same for Canada here as well. And then we have Bank of England. Now, Bank of England, we have heard from Bank of England before as well, of course. However, Bank of England basically said they're going to expand the QE program, and the expansion is expected to come in June. So if the comments stay the same, then of course I wouldn't expect a big change here. But any kind of positive vibe in the speech can have a positive impact, and vice versa. So there's a ton of central bankers. We have FOMC meeting minutes here, Reserve Bank of Australia. So essentially here, expect Wednesday here to be a little bit more volatile than expected, because there are 3 central bankers on the same day. And Thursday, expect lower volatility in the market because of the bank holidays here. And then PMI numbers here for actually both US and UK here. Now, the PMI numbers is your Purchasing Managers Index, which is a precursor to retail sales. Basically, the purchasing managers won't buy stuff if they don't expect it to sell. So right now, we are seeing that this is likely to go up. And part of the reason for that is because the economies are opening up around the world, and this will be the same for US here as well. We are seeing economies, basically most countries have a plan, some sort of a plan in place for easing restrictions. So we'll see how that plays out. Again, to that point, these kind of numbers will go up because people will be out and about more, they'll be shopping more, spending more money. So these type of numbers, I would expect them to go up. However, another thing we'll have to keep an eye out for will be the virus numbers and especially the deaths related to the viruses. So if we see the virus numbers start to go up in different countries, essentially, that would be negative. So we'll have to keep that in mind. If the negative numbers, if the number of deaths increase, then our stock market is likely to go down. But if we see a decrease in numbers, so let's say economies open up and all in all numbers will go up, but if the increase is not substantial, in that case that will be positive for the stock market, and we are likely to see the stock market go up, which means our yen crosses will go up and our dollar crosses and Swiss franc crosses will go up. So this is where now that economies are opening up, we just have to keep a closer eye on the news. And then, of course, PMI numbers for the US, same thing. If the number is within, within this number or better, or within reach of this number or better, then that will be good for the US dollar. And of course, we have Powell speaking again. And Friday, we have the Eurozone PMI numbers. Again, they're expected to be better because the economies are opening up. So we would expect this number to come in better than the previous number. But if the increase is higher, that will be positive for Euro. All right, so that's what we have. So Bank of England looking more urgently at negative rates. So if that happens, if Bank of England, Governor Bailey actually says that, I would expect British pound to drop as a result of that, although we are already seeing a lot of this priced in, but actually them going negative will have an impact, or if them even suggesting that they're likely to go negative is going to have a negative impact on the pound. All right, so let's move on to our charts now. So as usual, we'll start off with euro dollar here. So we see for the last several weeks here, euro has been holding within this range. It has tried to break it down. Even this week here, it went and tested the low, but it hasn't really been able to break out of that range. So right now, I'm neutral on this. This week, especially this week's candle close is neutral, even with US dollar doing better against a lot of different currencies. We have not really seen euro do much. So at this point, basically what I'm looking for here is if the price holds above the support level here at 1.0765, then I'm expecting it to go back up towards the top of the range. So I'm not expecting euro to be overly bullish, but it may just go into the support and then go back up towards the top of the range. So right now I'm expecting a range bound move. However, for some reason, if something, let's say numbers come in really negative or something, we could see this drop, but I would be cautious of that. I'm not looking to short it just yet till it breaks to the other side. And I'm not really looking to go long above this level here. So looking for a sideways move. So neutral bias, and the range would be 1.0765 into 1.10. So there's a fair bit of pips within that range there. Pound dollar here, this one just fell off. Now it had been trading in a range. This was the range that pound dollar had been trading in as well. And now we have finally seen a break below the range. As we can see in the last 3-4 weeks, twice it went through or tried to go through it, tested it, and then went back in. Now it has broken through the range. At this point, this looks like a very strong bearish candle. But what can happen is after a candle like this, we could get something like this. So that's what I would watch out for. And we could start seeing price go sideways after a drop. See how we had a drop and then it just went sideways before it continued. So at this point, I wouldn't get too bearish on it. I would be expecting this more likely than this just yet. So keep that in mind, which means we could start seeing pullbacks here. So bias is still to the downside, but watch out for pullback. So I'm going to look for pullback. So either into 1.2250, or we may have a shallower pullback into 1.2170. So let's say 1.22 and 1.2270 will be the two levels that I would be watching here. And this is the type of move I would be expecting here. If for some reason it goes below this, this support level here, only then am I looking for this move to get filled. So we do have an inefficient move here, sorry, on the way up. So this one could come all the way down here. I wouldn't expect it to happen within a week here. For the week, I'm just expecting it to go sideways essentially. So bias is still bearish, but just keep in mind it's bearish on this into the side here. Next target is 1.2020, and then below that 1.1950. So bearish bias here for pound dollar. Aussie dollar here, Aussie also dropped. So Dr. Millie, you had asked about tweezer top. So this is not a tweezer top, this is railroad tracks. Railroad tracks is when we have two different candles, one going in one direction and other one basically reversing the move. So this will be considered a railroad reversal, a railroad tracks essentially is the setup here. So in this case, this is a bearish signal. We see that price wasn't able to really break through the high here. It did test that level 3 times. Price was in that resistance zone, couldn't break through, and we finally have a bearish candle close here. Now, having said that, we also have the support level in the bottom. So for this one to really truly be bearish, we have to see a break through this level for it to continue to the lower level, because sometimes what can happen is price goes into the support here and then bounces back up, right? So at this point, my bias is bearish. Caution will be, we need to see a break. If it doesn't, it can reverse. But basically, this is the move I'm looking for. So bias is to the downside. Target is 0.6200. So bearish bias for Aussie dollar here. New Zealand dollar, this one, like I said, Reserve Bank of New Zealand essentially came out and said they are open to negative interest rates, even though they haven't implemented them yet. But just opening the door to negative interest rates is negative for the currency, because it creates that market expectation, and prices move on market expectation, and hence we have seen this a big drop here. So we have a bearish engulfing candle close, and overall the trend still continues to be to the downside here. So this is the move we have seen, and now price held here. So I would expect a move to the downside. Now, this is not, again, likely to happen in 1 week. So I wouldn't go, very bearish with it just yet, but it is bearish. Now, over here as well, we have to keep in mind prices into support right over here, which is 5,900. So if it doesn't close below 5,900, it can still go back. And as we can see, this is the range it's been trading. Let me just take away some of the lines here. So as we can see, this is the range price has been trading in for 1 to 5 weeks here. And it hasn't broken to the top, even though we had a strong bullish candle here, hasn't broken to the bottom. So at this point, if we see that price doesn't break through 0.5900, it can reverse. So we have to be careful before going too negative on this one. But bias is to the downside. What I would expect here would be a bit of a pullback here into 0.600, and then a further continuation to the downside if it can hold below this level. Now, it could go all the way into 0.6050 level as well. So do keep an eye on that level. But bias is bearish here. In terms of the targets, first target is 0.5850. And then below that, we are looking at 0.5700. So bias here is bearish for New Zealand dollar. Dollar CAD here, this one has been sitting in a range as well. As we can see, price tested the support several times. We had a nice bearish candle right into the support though, so we did see a turnaround. Now we have a bullish candle, and if US dollar stays strong, we are likely to see this one go up. But for Canadian dollar, we also have to keep in mind the oil prices, any improvement in the oil prices. So let's say for whatever reason, I don't know why it would take off, but let's say it does take off to the upside, then our dollar CAD can come back down. So that's something to keep in mind. Right now, this is range bound. So what I'm looking for here is basically a retest of the high of the range, which is at 1.4180. And if it doesn't go through, we could see a move back into the top of the, towards the middle and the bottom of the range. Once it goes through though, next target here is 1.4265 level here. So bias is bullish, but I am not, again, looking for this one to go test the highs just yet. We have to wait and see. With the different economies opening up, I think there will be this wait and see type of attitude. So we may not see everything go full steam ahead just yet. So for now, bias is bullish. First target 1.4180. Second one, 1.4265, and then 1.4350. So bullish bias here for dollar CAD. Euro pound here, this is where things turned around quite a bit. This is where we saw euro was holding its own while British pound dropped. So we tend to see this dynamic play out. So sometimes, well, usually they are aligned, but sometimes they will move in the opposite direction. And that's when we need to keep an eye on euro pound. We can see what's going on in terms of market dynamics. So right now, or last week, euro was strong, and that's why we have seen euro pound go up. So it's not so much that it was strong, it just held its own, it didn't drop, whereas British pound was dropping a fair bit, and hence the move up here. So bias here is bullish, and in terms of the target, first target is 0.8980, and then above that we are looking at 0.9020. With anything, when we have a big sharp move to the upside, I would look for a pullback though. We could get a pullback all the way into the top of this range that price was trading in. So for several weeks here, price was stuck in a range, and now it has broken out of that range. So watch out for a pullback in that case, but for now, bias is bullish for euro pound. Euro Swiss franc, this one is taking its sweet time, making its way down here. So bias is still bearish, but as we can see, this one is not going anywhere anytime fast. Not my favorite pair to trade. It just doesn't really move much, but still, overall bias still remains to the downside, as we see price is now trading in a lower range. So next target here is 1.0420, so bearish bias for euro Swiss franc. Pound Swiss franc here, this one has broken out of the range. With pound Swiss franc, this was the range it was trading in essentially for the last several weeks again, and now it has broken out to the downside. With this as well, I would be cautious with pullbacks. Anytime we have a sharp move in any direction, expect pullbacks. So this is the type of move I'm expecting here. Bias is bearish, and in terms of our targets here, first target is 1.1700, and then 1.1520, so bearish bias for pound Swiss franc. And then dollar Swiss franc here, this one is neutral. We see price is still stuck in this range here for multiple weeks here, and the candle close for this week was completely neutral. Now with this one, my bias is neutral. If US dollar is strong or continues to be strong, I wouldn't expect this to go anywhere anytime soon. And the reason for that is Swiss franc is strong and US dollar is strong. And both of these tend to be strong when we are in a risk-off environment, like we saw last week, where the stock markets were selling. So if the stock markets are selling, we are in a risk-off environment. And during that environment, US dollar is usually strong and Swiss franc is strong as well. So this would not be a good one to trade during that time because of the risk-off environment. So neutral bias for this, I would expect it to stay within this range here. So we could see it go into the high if the risk comes back into the market or something like this. Basically looking for a range bound move here, and the range is the high of 0.9800 and then 0.9600 in the bottom. Pound yen, this one finally dropped as well. And again, Japanese yen moves are a function of a risk on versus risk off environment. So with this one as well, we saw that price had been trading in this range for multiple weeks. Even previous week here, before last week, we saw that price went into this or tried to break out and then came back. So finally, we have seen a break of pound yen. Now, if Bank of England actually comes out and talks about negative interest rates, this is likely to take a drop. But like I said, with any sort of move, when we have price dropping, I would expect pullbacks. And in this case, 130.70 level may be a good level for a pullback, or even 132. Both of those levels, it can go back to it. So depending on what Bank of England says. So let's say Bank of England comes and says, no negative interest rates, we are good. That will be positive for British pound. And we could see a pretty rapid pullback. So keep an eye on that. So for now, bearish bias here. and this is the type of move I would expect. And first target here is 128.60, and below that we have 127.50, so bearish bias for pound yen. Euro yen here, this one has, this one's kind of gone sideways here. Part of the reason is because, of course, we see that with pound dropping, euro was holding its own. Now, in this case, we see price went into the resistance and dropped from there. So this one is still looking a little bit bearish. Now, it's not completely bearish yet. There is still bullishness in this candle. So we have to be careful. I'm more neutral on this, just like I'm neutral on euro. What I have seen in the past is these two can switch direction. So one week we see euro is holding and pound is dropping, and then the next week it flips. So pound starts to go up and euro starts to drop. So that's a dynamic I would keep an eye on. And usual case would be they both move in the same direction, right? So that's the normal case. But right now we have been seeing more of these dynamics of one moving and the other holding. So keep an eye on both of these and look at where the euro pound is going to see the real direction of which one is stronger. So with this one, what I'm looking for here is essentially, if the risk off environment stays, I am looking for a further drop back towards 114.40 level, but I'm not overly bearish just yet, but I am more leaning towards the bearish side. As we can see, it is still looking bearish here. Overall trend is still to the downside. So neutral to bearish is where I sit with euro yen. Dollar yen, this one has also, as we can see, stayed sideways here. We have a wick on top, but we also have a green candle close here, which means we are not completely bearish yet with this one. So this, my bias here is neutral. At this point, if US dollar stays strong and we are in the risk off environment, we could see this one just basically go sideways over here as well. So my bias is neutral for dollar yen, and I would expect it to trade between 107.80 to 106.30-ish level here. So neutral bias. Aussie yen, this one is bearish. Now we did see price go into the resistance level here, and it has held its own, which is good. So as long as it holds below this resistance of 70.20, I'm looking for a drop. We do have a nice bearish candle close here. So looking for it to go towards the bottom of the range, which is 67.50. And then if it manages to clear the bottom, only then we're looking at 66.20. And then we have 64.80. So bearish bias here for Aussie yen, but at least I would be looking for a move back towards this 67.50. Having said that though, the yen crosses are at risk of market sentiment. We have seen a lot of volatility in the stock market and between this risk on, risk off environment, and things just literally turn on a dime. So we're not, normally what happens is the market sentiment doesn't just flip from one day to the next. Usually under normal trading conditions, it will switch, it will take a few days to turn around. It doesn't happen suddenly. But because we are not trading under normal circumstances, now a single tweet can change the market risk sentiment. And this is why we have to pay extra attention to the news that's coming out right now, and also the comments that are coming out right now. So if US and China start talking again, that stock market is going up. If the coronavirus basically starts to die down, that means we don't have an increase in number or a rapid increase in number with the different economies now loosening the restrictions. That is a really positive thing, and market is likely to take off. And the reason market would take off so quickly is because we have these large institutions that are causing the market to move, because they are the ones placing in large orders to turn things around, which they didn't do they didn't change their positions quite as rapidly as they are doing. Right now, they're hedging in both directions, right? They have a long and short. All of them do. So they just add or remove their position. So it's not like they're actually closing all their positions. They are just adding to or removing from one of those positions, and that's what's causing the market to move. So be very careful with the comments. We just have to stay on top of the news right now. Okay, so that's bearish here. New Zealand, same thing here. We see price rejected the high, couldn't really make it even to the top resistance. This is where it's been stuck in all this time. So now we are almost into the support level here. So I would be careful. So we do need to see a break below the 63.50 for this to continue lower, but bias is bearish. Now we could get a pullback into the 64.3550 level here. And then I would look for a further drop. So my bias is to the downside. First target is 61.80 and then 61.00. So bearish bias for New Zealand yen as well. CAD yen, this one has been making its way to the downside slowly. As we can see, it's slowly going downwards here. So the bias is to the downside. We see price is holding below this downward trend line here. It did come and test it, and we have a bearish candle close. Now, the only thing here is we are into support again, so that's why we just have to be careful. But bearish bias here, and next target here is 75.00. Just be mindful of the support level where price is currently. So next one is 75, and then below that we are looking at essentially towards the bottom here, 73.80. So CAD yen will again be impacted by oil prices. So do keep an eye on both the market risk sentiment and oil prices for this one here. But bias is bearish, 75 and then 73.80, the two targets. All right, so now let's take a look at our commodities here. And we see silver has taken off to the top side here. So this is an interesting development that we have seen just recently here in the last week, where it has actually turned a corner here. So before we were seeing that gold and silver were moving in the same direction as the stock market is moving, which is not normal. And the reason that was happening was because when the large funds and large traders were trading, they had to sell pretty much whatever they had in order to maintain their margins. So in order to avoid margin calls or to maintain the margin. So basically they were selling everything. And with that, gold and silver were selling as well. Now we are seeing it come back into the normal relationship that we tend to see between gold and silver, as well as our stock market. So when the market is in a risk-off environment, we tend to see that the stock market goes down, and our safe haven assets, gold, silver, yen, Swiss franc, US dollar, they all tend to go up. So we are seeing this relationship go back to the way it used to be. So now with the stock market dropping, we are seeing gold and silver go up. So right now this is bullish. So this is basically just wanted to explain the relationship being back on track. So this week we saw a huge move up in silver. So again, anytime there's a large move, I tend to be a little bit careful going to gung-ho with it. So right now, bias is bullish though. And if stock market continues to drop, now we could see this one go up as well. However, just like anything else, I would look for a pullback. Now we could get a deeper pullback into the top of this range that it had been trading in. So watch out for both 16.35 level and then 15.85 level. Both of those would be the ones to keep in mind, but it is looking bullish here. And next target here is 16.85, and then we have 17.25. So bias is bullish here for silver here. Gold also looking bullish. We see that price has been trading in this range. Now, having said that, price is right into our resistance here. So gold, like I said, gold and silver both turned a corner here, and they are back into negative correlation with the stock market. So we have seen gold go up here as well. So it is looking bullish. The candle close for the week is bullish as well. The market sentiment is bullish for gold as well. But because it's into resistance, I would be careful with this one because we could see price turn around and go back into the range. So if it doesn't break this week's high of 1750, we could see price come back down. And another thing we may see is a pullback here. We may see a pullback either into 1735 or 1725-ish area. So I would keep that in mind as well. We may still see bullishness in it, except it may come down before it makes that next move to the upside. So either way, keep an eye on it. Overall, right now, this one is on a weekly. This is bullish. It's held. See how it's held the support. Generally, we see next leg higher right now. So we have a bullish flag pattern here, and that tends to go up like that, right? But for that, we do need to see a break of the high. If it doesn't break the high, it can still go back into the range, which means it could turn around and come back down. For now, we will keep an eye on this, and should it go through, next target here. Next target here is, actually, let me put a couple of them in place. Okay, so we are looking at 1755 and 1765. And should that trend strengthen, I think this one could go up higher even into 1780. So basically 1765, 1785 ish is where I would be looking for gold for the next move. But watch out for a pullback in this one before totally going bullish on this, because it has to break the resistance before it continues higher. Oil here. Oil is looking bullish, as we discussed. So for the last 3 weeks, this has been bullish. And now we are looking towards the top of the range here. So bullish bias is still intact. 34.20 will be the target. But keep in mind, it's right into this resistance level. So I would watch out for a pullback here, or even a reversal. But in terms of the pullback, we could get a pullback towards 27.65, 27.50 level before we see a continuation. So basically, I'm looking for that type of a move, but generally before it goes up, most likely it tends to be like that. Okay, so bullish bias for now, and target is 32.20 for oil. Copper has dropped here, and we have a bearish candle close. Price wasn't able to break through the resistance essentially. So bias here is bearish. Now keep in mind, we still have this support level that it has to continue or it has to break to continue lower. But the move that I would expect here would be a potential pullback into 2.32 and then a further drop towards 2.24. So this is looking bearish. And when copper is bearish, we generally see Australian dollar drop as well. So those two tend to move together. So if keep an eye on copper basically, and we could get Aussie trade out of it. So bearish bias here. Bitcoin, I have not checked the weekly figures. The weekend figures. So I don't know the current price. My broker is not open on the weekend, so it doesn't reflect the weekend move here. But based on the weekly here, this one's looking neutral. So we may see price basically go between 10,000 and 81.20. If it does break through this level though, then we have all this room to the downside. So for now, I'm neutral on this one. S&P 500. All right, so this one has been interesting. We have seen a back and forth move essentially this week. So if you take a look at the daily first, we see that over the last few days, it has been back and forth. Friday was essentially a wash. It was a neutral move here. I would say keep your eyes on the news feeds, because the risk sentiment tends to flip very, very suddenly right now. And risk sentiment right now is driving everything. It's not so much fundamentals, it's not so much technicals. It is completely the risk sentiment that is guiding the markets at this moment, or driving the markets at this point. So it is very important for us to keep an eye on stock markets as well as the news feed. So any positive comments, US and China talking again, US letting China have the technology that Hawaii needs, that is positive. US and China willing to have a conference call is a good news. So any of those things would be good. Again, coronavirus numbers getting better would be good news as well. So all in all, just be careful with this one. But for now, this one is looking, this one's more neutral, I would say. I would look for a move back down, but if it doesn't go through, we are back into the range. So we have been in this range for several weeks now, and I would expect that trend to continue at this point. For it to drop through it, what could cause it to drop? If the number of coronavirus deaths go up considerably after opening up the different economies, and then everybody starts shutting things down again, that would be negative for the markets. So any type of news like that would be negative. But we have also been hearing about different vaccines coming in, or the studies coming in positive. Those things are positive for the markets as well. So right now I'm bearish to neutral on this. I'm looking for a move back down towards 2770, and if it holds above, looking for that move back towards the mid and the top of the range. So neutral to a slightly bearish bias for S&P 500. Nasdaq here, this one has been interesting because the companies that drive Nasdaq, or that are listed on Nasdaq, are essentially large companies, and a lot of these large companies have actually been doing well. All the tech companies, the earnings have come in above market expectations. They have come in positive, and as a result of that, the index has done well. The candle close for the week here is a neutral. Same thing here. We have seen back and forth here with this one as well. So right now, I think the market is in wait and see mode. So we'll see where the chips fall in order for this to be driven. So right now, I am neutral on this. I won't expect it to be completely bullish at this point. I mean, look at the recovery here. This has been quite a recovery. Now, if for some reason everybody opens up and nothing bad happens, then we can see it go back. But in the grand scheme of things, this does not make sense, because so many people are unemployed. So what's causing the market to go up? The economies are shut down. There's high levels of unemployment. So how can something go up when the basic fundamentals are not working in that case, right? So this is what I'm saying. The market is completely disconnected from the fundamentals at this point. It's more based on the sentiment. So the economy is opening up is a positive sentiment, pushing the market up. High earnings for these companies, Amazon, Netflix, Zoom, all these companies have been posting positive earnings. And of course, we're sitting at home ordering stuff from Amazon. So that is to be expected. So basically what I'm saying is I'm neutral on this. I'm not overly positive, but I'm not negative yet either, because any of those positive news will drive it forward. Right now, I'm just expecting it to trade sideways, 88.20 to 93.40-ish range. So neutral bias here For some reason, if it breaks through that, I'm just looking for the next target of 85.60, not looking for this move to the downside just yet. So neutral bias here for Nasdaq. Dow Jones here, this one, same thing. We see it's gone back and forth here. Friday here was just a wash, sideways move. And as we can see, it tried to break through the support level and then pulled back in because of the market sentiment. And like I said, market just waiting to see what happens with the openings, economies opening up. So here again, bearish to neutral here. We may get one of these, and then price comes back into the range. So looking for a range bound move here as well, 24,600 to 23,000. That will be the range. Same thing for FTSE as well. We have seen moves back and forth here. Price did try to break through the support level, and then it pulled back in. So we have bearishness in this. I would look for price to retest the lows here and then do one of these. So bias here is neutral to bearish. Next target is 10,200. So DAX and then FTSE here. FTSE is again sideways here. We see price hasn't really done much. It did drop from the top of the range. Now we have a large wick in the bottom that shows rejection of that support level, which means we could get a move higher. So neutral to bearish bias here. We may see a retest of the low. And in that case, of course, our yen crosses are likely to drop as well. So I will watch out for something like this, a neutral or a sideways move here for FTSE. So neutral bias 56.50 and high of the range is 60.25. All right, last but not least, we have Nikkei here. This one is again sideways here. This is the daily chart. So if you take a look at the weekly, we see price did reject the high. It tried to break out to the upside, but it quickly turned around. So now we have a neutral candle close here. And at this point, I would just wait to see which direction price wants to break in. If it comes and retests the low at 19,600, I would see, does it want to break to the downside or not? But I would not get ahead of myself on this one. So neutral bias here for Nikkei as well. Just looking to trade last week's range between 19,600 and 20,500. All right, so that's all I have for today. And there was a question on euro dollar. Euro dollar is neutral. It's neutral. We'll have to see, does it want to break through the support? If it does, then we are going, I'm looking at 106.50, but I would be careful. It's been sitting in this range for a while. So right now it's neutral. All right, any other questions? Okay. Perfect. You guys have a wonderful trading week, and I will be back for daily analysis tomorrow. Bye for now.